Biden's tax plan proposal, the good, the bad, with plenty of ugly. Let's dive into this here. It's a Dateline September 30th from Kisses.com. Jeff Levine had written this article, and we're going to read this. The Biden tax plan, proposed changes and year-end planning opportunities. So let's go. I guess we'll just read the summary here real quick. When Trump passed the Tax Cut and Jobs Act, substantive tax reforms were made to the intention of promoting economic growth, blah, blah, blah. All right. One key feature of the Biden proposed plan is for ordinary income tax brackets to be adjusted for individuals with annual incomes over $400,000. Whether this applies to individuals or joint filers remains unclear. Increasing the top bracket to 39.6, which is what it was before. The income brackets with those with annual incomes under that would remain unaffected. Oh, but I thought Biden didn't like the tax cuts. Well, you didn't vote for it there, guy. Or you weren't in Senate, but still you were against it. Biden's plan also includes the elimination of the QBI, the Qualified Business Income Deduction, which that's a big ugly right there. QBI is fantastic. For pass-through business owners, partnerships, LLCs, S corporations, and sole proprietors, and I've taken advantage of this, whose annual income is $400,000 or more. Okay, so he's saying if you got $400,000 more, it'll eliminate it. Gotcha. All right. So that's not me, right? So potentially increasing the tax bracket for high earners by 10% from 29.6 to those eligible for QBI to 39.6. The plan would also cap the value at the rate at which itemized deductions can be taken to 28%. Let's just get rid of all itemized deductions. What is so hard about that? Get rid of them all. The Republicans can make hay with that. I'm telling you, man. They can make hay with that. Let the Democrats defend the wealthy. Why don't the Republicans? I just don't get it. He said, because look, very few people on the Republican side are writing money or writing stuff off. They're just not. So just freaking say we're getting rid of itemization. The Democrats are the party of the wealthy. Another feature of Biden's tax plan is a flat retirement contribution credit as determined by a specific percentage, currently 26% of the contribution amount to replace deductions of those retirement contributions. I got no problem with that either. This would in fact lower the tax burden for taxpayers and tax brackets under the proposed set rate, while increasing it for taxpayers in the higher brackets. All right, I got no qualm. Financial advisors who want to prepare an expected Biden victory might consider accelerated income and deductions to 2020 for high income earners, because for this group, income tax rates may be higher. I agree with that. Enhancements to personal income tax credits made by the proposal include the higher child tax credit from $2,000 to $3,600. All right, so whatever. Long-term, this is what right here. Long-term capital gains and qualified dividend rates would increase the ordinary income tax rates for income over $1 million. I'm all for that, man. I'm 100% in agreement with that. With a 3.8 surtax on net investment income remain in place. I got no qualm with that. And there you go. So that's what we're talking about. Warren Buffett pays less than his secretary. Well, now he won't. 1031 exchanges would be eliminated for taxpayers with annual income over $400,000. No qualm with that. Some strategies to mitigate the impact on these proposed changes would be to target lower annual capital gains realized. Use municipal bonds for their largely tax-free. Okay, they're just talking about. I don't want to get into strategies now because we have to look at the actual plan. Additionally, Biden's tax plan proposes the elimination of the step-up and basis rule that currently applies to assets inherited that are not considered IRD. I did a video of this the other day about IRD with income respected decedent, which would impact both higher and lower earnings, potentially facing a significant and problematic tax bill on inherited assets. This right here is the biggest hit to middle-class people right there. The step-up and basis rules is a wonderful, wonderful tool to pass property. Most people's biggest assets are their home to their kids. To get rid of that is a huge tax increase on middle-class people. Trump should, and any Republican should be hammering this like crazy. Oh, you're going to raise taxes on middle-class people? No, I'm not. You are. If you get rid of the step-up basis, you are raising taxes on middle-class people. If they do that, life insurance could receive renewed potentially. Yep. A final would be a 50% reduction on the exclusion amount for estates and gift taxes. I don't get that, man. Just do a wealth tax on the super wealthy and be done with it. The tippy top, as AOC says so eloquently. I don't like that at all. That's ugly. Other strategies that can be considered grats. I thought Obama got rid of grats. I don't think he did. I don't even think they got rid of 2-year grats. Intentionally defective grantor trust, CLATS, charitable lead annuity trust. Anyway, ultimately, the key point is that even though there's much that can be planned for the stage prior to the election, the most important thing is to stay in the present moment. All right, so I just want to see, he says, Levine says, I got a secret to tell you. Just over a month, it's going to be a really big election. Thanks to the enormous powers of U.S. presidents, which seem to be growing with each presidency, all presidential elections are big deals, but this one might be bigger than most. Not only are we welcoming a president to help continue to navigate the worst global pandemic in more than a century, or literally it's not, but perhaps at no time of our country's history has the two sides been more divided. That's just so stupid, man. We're not more divided than any. We're always divided. That's the way politics is. Politics is a division. It's 50+1 in democracy. Anyway. So Biden's tax plan. I hate the idea of reducing the estate stuff. I don't. Why? I mean, if you're gonna just make a higher estate tax on wealthier people is what you do. This is stupid. Part 2, getting rid of the step-up basis is a hill the Republicans should die on. Absolutely, that's nuts. That is nuts. The Republicans should die on that. Let's see. Getting rid of charitable deductions. I got no qualm with that. None whatsoever. Raising QDI to ordinary income for if you got more than $1 million in income, I got no qualm with that. None whatsoever. I got no qualm with some of that stuff. Oh, but you must be a Democrat. No, is at the end of the day, I know who the Republican base is. And the Republican base is not hedge fund managers in New York City. It's just not. It's just not. And those hedge fund managers in New York City have higher, they're already subject to estate tax. So reducing the estate tax to $5 million, that just hammers small entrepreneurs without question. It has nothing to do. You're not hitting rich people. You want to hit rich people, you raise the taxes on the wealth tax on those hedge fund managers in New York City and Boston. Absolutely. That's what you should do. Done. Get rid of qualified deductions because no one on our side deducts that much. I know I do because I have a big fat mortgage and I have a bunch of children, and we don't quite tithe, we come close. So this plan in of itself is a big fat nothing burger, but there's some stuff I think the Republicans could take and run with once they win re-election, which Trumpster certainly will do. All right, we'll see you.